Welcome to the Business Leadership Series, where we engage with leaders who are making an impact on their worlds and who want to share their knowledge and experience for your personal and professional growth. The following interview is designed to inspire you to become the best leader you can be. Your host, Derek Champagne, is the founder and CEO of The Artist Evolution, a full-service agency building successful brands, marketing tools, and campaigns, and also the author of the best-selling book, Don't Buy a Duck. And now, let's begin today's Leadership Series interview.
Welcome to the Business Leadership Series, where our goal is to inspire you to become the best leader you can be. We've got a great guest today. We've got Dr. Buck Joffrey, who is an accomplished physician, entrepreneur, asset manager. He's got a great podcast as well. And he is passionate about talking about wealth formula, and he hosts the popular Wealth Formula podcast. He actually went from being broke to actually having a investment of 8-figure net worth. Welcome to the program today, Dr. Buck.
Thank you.
So tell me a little bit about your background and then how you got to where you are today. We've got several questions for you, and I know you're going to enlighten us about a new way of investing, an effective way of investing, but I want our listeners to get to know you a little bit as well.
Yeah, sure. So as you mentioned, I'm actually trained as a physician. I'm training in head and neck surgery and plastic surgery, and I finished my training in 2008. So I was your classic A student, right? So you don't hear about many huge business successes and A students, but I was a classic A student, and did all the right things and went to the right schools and so on and so forth. And toward the end of my training in 2008, I actually was starting to get burned out a little bit on the whole idea of academic medicine, even though that was sort of what my whole life seemed to be pointing at. And when I say academic medicine, meaning, going to university and becoming a professor of surgery of some kind.
Okay.
And so when I finished my training right around 2008, and as I mentioned, I had some training in plastic and cosmetic surgery, so that's the route I decided to take, and I joined up with a large company that specialized in cosmetics, and so it was sort of like joining corporate America, except on the doctor's side. And I was with them for about maybe it was 8 months or so, and I realized pretty quickly that I didn't really like being told what to do, particularly because I felt like, I felt like I was smarter than them, and they were telling me what to do, and they were not physicians. It'd be like the office manager or something like that, and so I got into big arguments with these people all the time, and next they fired me. And so that was probably the best thing that ever happened to me, because I really never had a whole lot of failures up to that point, which I think is part of the reason why typically A students, don't end up as entrepreneurs, because, they're not used to failure, right? So fortuitous time to be unemployed and watch, 2008 during that little stock market thing that happened. I was all of a sudden tuned into the thought of money, and it was also right around that time that I'd read a Kiyosaki book called The Cash Flow Quadrant.
Right.
That was the first Kiyosaki book I ever read. And for me, it was the first book about money I ever read. I never thought about money. I mean, like most doctors, I just wanted to be a doctor, and that's all I read. At any rate, the whole thing just completely changed my perspective on life. And so when I talk about, being broke, well, I was a surgical resident in San Francisco, making about $50,000 a year. And if in the city of San Francisco in 2008, if you're making $50,000 a year, that's like making like $10,000 a year in your house, right? So, so my training was complete. I got fired, started my own company. I'd never, that was similar to the one that I was working for. And within 18 months, became a millionaire. And it was a fun ride. I mean, it was scary, but it was really fun. And I kind of got addicted to the whole idea of starting businesses. So then I started. A couple of years later, I started another business, and then a couple of years later, I started yet another business, and they all did pretty well. So So, I actually am semi-retired as a physician now. I don't, my initial cosmetic practice, I don't do anything there anymore. I employ physicians.
Okay.
Now, the thing that happens, of course, when you make a lot of money, and this might be interesting to a lot of your listeners because they're business people, right?
Right.
Is we're all thinking about how are we going to make money, right? We spend a lot of time thinking, how the heck are we going to make money? But once we make it, most of us don't think a whole lot about where the heck to put it.
Right.
Right. And so that was what I was really interested in understanding more. And my dad was a real estate guy. I never wanted to be a landlord. But the next thing you know, especially with the Kiyosaki influence, so on and so forth, I ended up interested in real estate, ended up buying real estate, started looking into a lot of alternative investments, and started a podcast because my colleagues were trying to figure out, how I was doing what I was doing. And of course, they have no education in this stuff. So started a podcast to try to teach, high-paid professionals and business people not only of what I know about entrepreneurship, but what to do with their money once they get it.
Right. So tell me about, and tell us the name of your podcast so we can take a look at it.
Yeah. So it's called Wealth Formula Podcast.
Great. We'll put some links to that as well when we post the article version of this. So tell me about some misnomers or some outdated and dangerous ways of thinking or for investments that are no longer viable now. Like, what have you learned that's valuable to our listeners who may be looking at some of the old outdated ways of investing their money?
Well, I think the biggest thing that I would say is outdated is pretty much everything that a traditional wealth advisor will tell you, because they're based on a lot of assumptions. And those assumptions these days, I think, are very dangerous to consider when considering that this is all about, how you're going to retire and create a some sort of comfortable living for yourself someday. So some of the assumptions I'll tell you, and this is any retirement calculator, right? Mm-hmm. And an advisor, they'll typically talk about. They'll base it on at least a 7% nominal growth. We're talking typically about stocks, bonds, and mutual funds. There's also, and by the way, I'll say that historically, if you look at that, if you look at it in the S&P 500, maybe that works. But if you look at historically in terms of mutual funds, that's probably the growth is about 3.5% to 4% in the last 30 years. And there's a lot of reason for that I talk about, for example, loads and so on and so forth that are involved. Even junk bonds, you're looking at 40% or 4%. So how are you going to get to 7% that easily, especially in a market and in a financial time in the U.S. that, in my view, is unparalleled? Never in the history of the world have we seen near 0% interest rates for 8 years straight.
Right.
We've got gigantic bubbles in the stock market. We've got crazy valuations. We've got every major player in this. When it comes to traders like Jim Rogers or George Soros, they're all shorting the market. Right. So, in my view, what the whole concept of growth and okay, you're gonna put your money into the market, you're gonna do this, you're gonna grow at 7% per year, and then at some point you save enough, a finite amount of money, and then you hope to outlive it. To me that's kind of scary, right? Because first of all, the assumptions are all wrong. Second of all, we're all living longer these days. We're going to be living longer. And remember, I'm a doctor, so I can tell you that that we are going to be living longer. But I think you're going to see. I think you're going to see a rash of even high-paid professionals dying broke, and I truly believe that. And I think and that's why, in my view, I advocate for more definitive sort of measures of trying to figure out how you're going to calculate how you're going to be able to survive.
That's great. So you advocate entrepreneurship or investing in hard assets, provide cash flow, more reliable ways to approaching personal finance. Tell me some solid recommendations on how you do that.
Well, listen, the first thing I will tell you is, like everybody who is a real asset investor, there's some things I will tell you. First, I only invest in things that I understand and that people need. So obviously that brings, apartment buildings and real estate in general. That keeps it in play. So I'm heavy into real estate. Now I also keep in mind Maslow's hierarchy of needs. So I'm not out there buying office buildings and things like that. I like to invest in B and C class apartment buildings, meaning working class apartment buildings. Right? That's where people got to live. Millennials aren't even buying houses anymore. Right? So I like to also invest in. I also keep some money in precious metals. Why? Because an ounce of gold today might buy you a fancy suit, and an ounce of gold in Roman times would buy you a fancy toga. That's why. Because there is something about real assets that creates ongoing wealth. And if you look at some of the the most wealthy families in Europe, and we talk about America, I mean, we've only been around for not that long, but you've got. In Europe, you've got these families that have been, wealthy for 1,000 years, and it's because they own stuff. Right. In 2008, we saw, what do we see? Like $3 trillion of quote unquote assets evaporate over just 30 days. That's not real. If an asset can evaporate, it's not real. Right. So, unless it's oil, I guess, and you're burning. Which I do like energy investments as well, obviously. So
okay, that's a different risk, though.
Yeah, it is and it isn't. I also like to invest in things that are tax advantageous. I mean, so at any rate, things that I understand, things that people need. They need to live somewhere. They need energy. There are a variety of things like that I advocate.
So are you suggesting to pull out of of a portfolio of mutual funds, stocks, and bonds completely, or just to be more aware of having your cash flow work for you in a different way and have a more balanced portfolio that includes things like hard assets of buildings and precious metals and that sort of thing? I have a 8-figure net worth, and I have $30,000 in the stock market. And that's because I have an old IRA. Okay. I don't believe in it. To me, it's a casino. And we've seen it. We saw it in the .com era. We saw it in 2008. And to me, it's just it's like it's putting your money in a casino and hoping that the dice, come in your favor just as you need it. Right. And so, no, I don't believe in it. I do believe in education. I believe in buying real things. And I know I'm going to be, people think I'm nuts, but the reality is I've done very well in terms of this kind of investing. And a real estate portfolio that I have yields me, an average of about 15 to 16% per year. My worst investment yield is in oil and gas. And even that's giving me 5%, which is better than junk bonds. Right. So what are the next steps for someone? What are if they currently have the outdated portfolio, diversified portfolio? What do you recommend for the average person listening that is a high paid professional or that has significant investment in the market? What are their next steps?
Well, in my view right now, if you have money in the stock market, do what the big traders are doing. Listen, you don't have to listen to me. This isn't brain surgery, although I used to be a brain surgeon. I'll tell you that every major player in the market right now is out, or they are actively shorting the S&P 500. So should you be in the market? I don't know why you would be. So, okay, so maybe, at the very least, I would pull your money out. That's what I would do if I had money in the stock market. Second, I think a big thing is investing in your own education. I mean, that's what wealthformula.com and Wealth Formula podcast are all about. It's about trying to understand that some of this stuff is not that hard. If you are an entrepreneur, if you're a professional who's making a lot of money, you're a smart person, And the only reason things that in investing that sound complicated is because the folks in Wall Street are trying to make it sound complicated, and they make it sound complicated. And it reminds me of the whole sort of the young girl going to the mechanic and saying, "Oh, something's wrong with my car," and the mechanic comes back and said, "Yeah, ma'am, I've got 10 things here, and it's going to cost you $10,000 to fix it," right? And the girl doesn't know what to do. Okay, well, I guess you know what you're doing. I mean, that's what people are doing with their money right now, and to me, that's downright dangerous because these are unparalleled financial times, and we don't know what's going to happen. The Federal Reserve doesn't even know what's going to happen with the economy.
Tell me about the golden handcuffs. What is that for high-paid professionals?
Well, here's the problem with high-paid professionals as I see it, and is that when I was broke, when I was a resident making $50,000 a year in San Francisco, and again that was really hard to get by there. I always thought, gosh, if I could make $100,000 a year, it must be so easy, right?
Right.
The problem is that once you start making more money, just like a business, your overhead goes up.
Right.
Right?
Absolutely.
Okay, so now you're not a resident anymore, or now say you got a law school, or now your business is all of a sudden, you get a lot of business owners are starting to do really well, and those businesses are starting to put money out, and all of a sudden you're thinking, well, geez, maybe I should buy a nice house in a nice neighborhood, right?
Right.
And now that overhead goes up, and then, well, maybe I should get a car I want. So the point is, before you know it, people end up becoming, they end up putting themselves in golden handcuffs. In other words, I don't call it the rat race for people who make a lot of money, because it sounds golden handcuffs is in my view a sort of a better description of that. Right. It's like you are living this life of nice cars and nice houses and nice things, but if you stop working tomorrow, it'll all come crashing down on you within a month or two. So that's golden handcuffs.
Okay. So give us some more. Tell me about wealthformula.com. Where do you come in where you can help guide myself, our listeners, who may be novices to your type of investing, which it does make sense. I mean, obviously having real hard assets that reflect and understand hedge inflation and things like that makes sense. What's the next step?
Well, I mean, I would encourage people to try the show out, the Wealth Formula podcast. Now, in terms of wealthformula.com, that website, primarily what that is it's a site where there's a lot of basic financial. It's almost like a site of definitions, okay? Because a lot of us, especially doctor types, come out of medical school and we're so clueless, and we're so clueless we wouldn't even want anybody to know how clueless we are about financial language, about when people are talking to us, like, what do they mean? What is a bond? What is, that kind of thing. And so that's what that site is for. But the podcast is really trying to take it to the next level, because I believe you have to speak the language. But in the podcast, what I try to do is to educate my philosophy in real asset investing. And along that lines, I introduce people to a lot of different opportunities. They're opportunities that I don't have any personal financial gain in. But for example, I invest a lot in these kinds of opportunities, and I want others to know about them. So I'll have people who are on there that syndicate, big apartment buildings. I happen to syndicate apartment buildings myself, okay. But others who act as sponsors and allow people to participate in ownership of buildings, of mortgages and debt, and all sorts of things that are, to me, make sense. They're tangible, and probably the biggest thing is I know these people, and I know they have integrity. That never means that that never means that you're going to make money, but right. It certainly helps. It certainly helps your chances. My goal with Wealth Formula Podcast is to create a community of like-minded individuals who are essentially understanding and seeing what Wall Street has done to us, and are saying no to Wall Street, understanding that real assets and real things are what create and maintain wealth over generations, and who believe in cash flow as a definitive way of predicting how they're going to end up retiring. And so we all believe that, and there's a lot of very passionate people in this group. We try to find deals. We try to share, not just deals, but people who are doing interesting things, and really get exposed to these, different ways of investing.
So thanks for sharing that. That's great. That sounds like a great resource. So you talked about some tangible steps as to probably number one, and is possibly pull your money out of the market if you are investing or not getting return. And number two, look for educate yourself, and then look for hard assets that are going to provide the cash flow for retirement. Any other steps along the way that should be considered?
I think it's just an ongoing education thing. I mean, I'm learning every day, and that's one of the great things about the podcast for me is it forces me to continue to learn. And so once you can kind of wrap your head around the idea and start as you said, listen, you don't have to pull your money out of stock. I don't like to give people financial advice, but I'm telling you what I would do. Yeah, exactly. Pull it out and then try to figure out other things that you can do with it that are going to make you feel like you understand it, right? And make you feel like you can see something tangible, and start relying on those things as your nest egg.
That's great. So I would encourage our listeners for next step is to actually visit wealthformula.com, listen to the podcast. You can access the podcast from that site, and you can educate yourself with some of the definitions here as well. But I think listening to Dr. Joffrey's podcast and listening to what the community is about there, and then finding out, understanding their approach and their mindset is going to be helpful as well to before you start looking at doing other investments. What other advice do you have for us?
I think the biggest thing is just to get out there and do it. I mean, if you guys, your audience, I mean, just listening to some of your shows sounds like there are a lot of, entrepreneurs and business owners, and
yes.
That's a great place to start, because you get the mentality, you get the idea that, you've spent a lot of time thinking about how you can make money. Now spend that same amount of time trying to figure out how you're going to invest it.
Yeah, and that really makes sense. And for the entrepreneurially wired or the business minded, it's more comfortable than putting money in the market. It really is, and it's easier for us to measure and watch, and we're comfortable understanding how cash flow can be consistent and reliable for us. Any other advice on, just as general advice on what would be considered maybe a moving asset or not a hard asset? I mean, somebody might go and I know people have gone and invested in real estate and then or apartment buildings, and then didn't do it in the right time, and it was subsidized a certain way, and then they end up not doing so well on it. Any other general rules they might follow that says, hey, this is the kind of guidelines to follow if you're going to look at the hard assets?
Well, I think the biggest thing is just it's really not. It's really about being able to underwrite, any particular opportunity, right? And that just comes with experience. Mm-hmm. I know that, a lot of people say with multifamily real estate that we're on, sort of a spectrum right now, where a lot of people think the price, the cost of the markets are the cost of the assets are high, and I think that, as a general rule, that's true, but there's always deals to be had. And that's where you have to, that's where the education comes in. Mm. But listen, there's also other ways to invest, and they don't always have to be, I say hard assets, but really what I'm talking about is things that you understand. Like I have a friend who has a fund that I've interviewed before, and I'm going to interview him again actually next week, whose entire business model is based on buying non-performing mortgages in mass. So he'll buy like $500,000, $1 million of non-performing mortgages. But instead of evicting people, what he does is he rents it back to them. He rents those houses back to them, and the returns that he gives his investors is phenomenal. It's like 12%, and he, I know, makes 48%. So it's easy for him to give 12%. Right. But for non-entrepreneurs, that sounds like there's no way that's real. But we know it's real because he's gone out there and he's done it and he's really good at it. So when you look at something like that, I like that kind of investment right now because I do think that that there's probably going to be a massive correction in the stock market, and that there's probably going to be a big, sell-off, and there may be some problems with people losing their homes and stuff like that. So that particular fund is actually really good for when times are bad, So there's an abundance of these things. I mean, I have friends in the mobile home industry and who are doing deals there too. Now, one of the nice things about the show is that you'll understand that if you want to invest in some of these things, you don't have to be, if you want to invest in apartment buildings, you don't have to be a landlord. If you want to invest in, mobile homes and things like that, and you like what that sounds like, you don't have to go run a mobile home.
Right.
I mean, there's lots of ways to invest in this stuff and private investments. I had another guy on this show who does coffee farms in Panama. I mean, that's and there's something that's totally real there, and it's addictive, right?
Right.
So that's not a bad investment either.
Right.
And so it just goes on. And every day that every day I'm doing the show, I'm actually finding out more and more stuff that's available. And again, it's about small steps, and sometimes you have to dip your foot in there. I mean, I was just planning on another show that I'm doing with what's called a turnkey provider for single family homes. So people, I'm sure a number of people have thought of, well, I'm going to buy a house and rent it out, but I don't want to be a landlord. Well, there's people out there who can do what are called turnkey rentals, which means that you just buy it and they'll do everything else and they'll send you a check. I mean, there's those too. So yeah, there is a number of opportunities out there, and the key is to become part of a community that sees that kind of deal flow, and also can talk about those kinds of deals and and vet them together.
That's great. Man, thank you so much for being our guest today. I want to encourage our listeners, visit wealthformula.com. Dr. Buck Joffrey talks about investing in real assets to create real lasting wealth. He's got a great podcast, and you'll see it on the page there, and that is the Wealth Formula podcast. Anything else you want to share with us today?
No, the podcast can also be downloaded on iTunes and Stitcher as well, so you can get it there.
Perfect. Man, thank you for sharing your advice and for sharing your success story. And we look forward to visiting and learning more, and then getting to know the community that you have on your podcast.
Thank you, Derek.
All right, you have a great one.
You've been listening to the Business Leadership Series, where we engage with leaders who are making an impact on their worlds and who want to share their knowledge and experience for your personal and professional growth. This interview was designed to inspire you to become the best leader you can be.